Hi there, thanks for coming to this 5-minute class. I'm Jennifer Croft and I'll be teaching you how to get a loan for your business. If you like this class, we have a bunch of other free classes and resources available at www.5minuteclasses.com. Okay, so before you go out and try to get a loan, you're going to need to get prepared. And so to do that, it would be very helpful to write a business plan, calculate the amount of money you'll need, whether this is for startup or growth, and do a cash flow projection of which again will help you come up with how much money you need and when you need it. And in this cash flow projection, I'm going to advise that you estimate high on your expenses and low on your sales just to be on the safe side. So the main types of business loans that are available is either a line of credit or what's called a term loan. And so with a line of credit, you go and you get approval for a certain amount of money that you can borrow, say $50,000, and then you don't actually have to pay interest on it until you use some of it, and you only need to use what you need. And this is a great way to get money for inventory fluctuations, seasonal swings, a large contract you may need to fulfill. And the other type of business loan is called a term loan. And with this, you actually borrow a set amount of money for a set amount of time at a set interest rate, and you have a fixed monthly payment. And so term loans are good for startup costs, any kind of improvements you need to make in your warehouse or retail space, or for equipment or growth. So when you're going to a bank, they're going to, when they're trying to decide whether to loan you money or not, they're going to look at your credit. The better your credit scores, the better, or the higher your credit scores, the better. They're going to look at what collateral you have to put up against the loan, which could be equipment, it could be personal real estate. They're also going to see how cash flows in and out of your business to make sure that you'll be able to pay it back. And finally, they take a look at your character. So there's also a category of lenders called microlenders, and these are usually associated with economic development centers, and they'll lend smaller amounts of money in riskier situations, and they often provide support with that loan, but their interest rate is typically higher. Another place you can go to get a loan for your business is by taking out a home equity line of credit. And for this, you won't have to produce a business plan. Banks will lend against your home for you to go on vacation or, pay for college or make renovations. So this can be a good source, and the interest rate is typically lower than what you would see on a commercial loan. Also, you can turn to family and friends to borrow money. You can see I put this slide last because it really, to me, would be a last resort. And if you're going to use family and friends as a resource, as a bank, basically, I still think it's good to go through a formal process of deciding exactly how much you'll borrow, what the length of it'll be, how much you'll pay back in interest, how fast you'll pay it back, and what, if any, collateral that you're going to give your family or friends as security for the loan. And most importantly, I want you to make sure if you do this that no one has a hidden agenda, meaning that someone isn't lending you money but they secretly hope that you'll turn this into $1 million business and give them a job or something. So just be really clear and put everything in writing. So no matter who you borrow from, these are some things that you can compare to make sure that you're getting the best terms possible. And you can go out and get one or two bids on this, maybe three, just like you would for any other large commitment or purchase. And so what you'll be comparing is the interest rate, the amount you'll be paying in fees, the length of the loan, the amount that you're able to borrow, what collateral the lender will need, whether you'll need to personally guarantee the loan, which in most cases you absolutely will, even if you own a corporation. They're going to want you to guarantee the loan as president of your company and also as you personally. And finally, whether the bank or lender is going to require a cosigner on the loan. So before you borrow, I just want to, this is a cautionary slide just because I've seen a lot of business owners get in trouble with borrowing. And so for startups, I think it's a good idea to scale back your plans as much as possible so that you don't, put yourself in a hole right away with a lot of debt and risk. For existing businesses, make sure that whatever is going on in the business, if it's a problem, is fixed before you borrow the money. The money isn't going to cure the problem, the money is just going to postpone dealing with it, perhaps. And for all businesses, I'm recommending that you borrow more than you need but don't use it all. And as a final caveat, banks don't like to lend to people that need money, so borrow long before you actually really need it. So here are some good next steps you can take that go along with this class. Here are some worksheets you can use. And finally, we have a free newsletter that you can go back to the website and sign up for. So thanks for coming to this 5-minute class, and best of luck with your business.